If you know the answers of these two questions, you would probably be able to make $1 million in less than a year. The first question is, can you predict Sydney real estate market growth in this current year 2022, with 100% certainty? Can anybody say, because we keep on talking about real estate, we say the prices are going up. Some people say now it's going to crash. We have seen enough growth. No, it's not going to happen. Are we 100% sure that's going to happen? It's going to grow, it's going to crash, or it's going to grow further? If you know the answer to this question, then it means you can be a millionaire by investing in real estate. The second question is, which suburb or region within the Sydney you will have maximum capital growth? The reason I put this second question, just to give you one glimpse, that always we talk about real estate in Sydney as a whole, that, for example, Sydney grew by 20%, 15% in last 6 months or last 1 year. But in reality, not all the suburbs in Sydney behave alike. Every suburb has its own nano economy. And within that nano economy, there are some, within a small suburb, there can be different spots where you have a different growth pattern as well. And this is what we're going to discuss today, how to recognize, how to identify specific region, specific suburbs where we should invest or where we can have a prospects of high capital growth. So just to back up my theory, just to back up my questions, I'm going to share some of the research, some of the information which has been done by different research houses to back up my theory. Now, SQM Research is a very, very respectable name in Sydney real estate, in Australia real estate. In fact, they have been in this Sydney in real estate research business for probably quite a few decades now. And in December 2020, when they saw that despite COVID, the real estate market did not go down. In fact, it went up. They were surprised too, like everybody else. So they decided to let's make a prediction for what's going to happen in year 2021, because they knew that not one variable, not one thing controls the real estate. It's a combination of different variables. What they did, they came up with 4 different scenarios: scenario 1, scenario 2, scenario 3, scenario 4. And they try to pinpoint the growth of major 8 cities in Australia. All right, because we are in Sydney, we only sell in Sydney, so I'm only focused on Sydney figures. But based on this research, they have decades of experience, guys. They have many people working on data and crunching the data for them, and they came up with the 4 different scenarios, and they believe that in 2021, Sydney market will grow anywhere from 0 to 11%. Depending upon how these variables play. But even with all the data they have, all the expertise they have, they were not even halfway through, because Sydney market grew by 25.3% in December in year 2021. And they predicted it in December 2020. So in reality, what I want to say that if anybody tells you that the Sydney market is going to go up or Sydney market is going to go down, they are basically joking with you. They are basically taking a wild guess, or they in reality, they cannot put their name on that statement. They will always be guessing. They'll always be, making a wild hunch in their mind, or expecting or repeating someone else's statement. So just as SQM Research is just one of the few examples. So here is the statements or the predictions done by different news houses or different research houses since year 2014. And if you look at these numbers, that is the prediction. They have been doing it from last 8 years. From 2014, everybody wants to be the real estate guru, and they want to predict what's going to happen next. And that's what they have been saying. So, but in reality, the reality is far from fiction. Every time they were at least off by 20 to 30% in their predictions. What does it tell us? That nobody knows or nobody can predict what's going to happen in future, especially in real estate, in Sydney real estate mainly. Why? Because Sydney real estate is very versatile. Not one variable controls it, and not one suburb behaves like another. So they have been a difference of, if you do the average, it would be more than 25%. So each year they were off by 25% in their estimation. And that is not a joke. If you have $1 million property, either you will make $250,000 or you will lose $250,000. You know what I mean? So if you put these numbers, so let's say you take a property, buy a property of $1 million in 2013, and if you put those predictions, the percentage, into actual dollar value, if everything goes as per their prediction, as per their analysis, your $1 million property will become $178,000. But what happened in reality? In reality, it went other way around. Your $1 million property would have become more than a $2 million property in 8 years. That is how the Sydney market has been underestimated for last many, many years. Even today, in fact, a day before yesterday only, I read an article where they are predicting, I think NAB is predicting or somebody is predicting that the Sydney market can fall after July by 15% because of an interest rate. But again, this is just a wild guess because not one variable controls it. And I'll come to that in the next few slides. So now why we are here, like why we need to invest. Before I go and touch the variables and, get to the more interesting stuff, let's see what motivates us to spend our evening in front of the computer, listening to a simple guy like me, who also doesn't know much about real estate, guys. The reason we are here, because we want to secure our future. And how we secure our future? By earning money. So I'm going to take an average, like the numbers which are related to Sydney, because we all live in Sydney. So the median household income in Sydney is around $2,100 per week, which means annual income, median annual income in Sydney is around $110,000 approximately per annum. After taxes, you actually end up saving $83,000 approximately. This is your disposable income. This is the actual cash you're going to receive if you earn $109,000 per year. Now, it means if you want to retire, and at the time of retirement, you do not want to work anymore, you need this much money every year, right? So let's say you are retiring tomorrow, and the average retirement age in Australia is around 60, and average life expectancy is 83. And which tells us that average retirement life in Australia is 23 years. In Australia, the inflation is around 2.5 to 3% per year. And if you retire today, let's say you're retiring today, it means if we do all these numbers, that you don't want to work anymore, you don't have any investment, you only want to live on your savings, you are earning $83,000 every year, and you want to have a same lifestyle. Now you multiply with that 23 and put the inflation in, and you are living at the age of, let's say you are at the age of 60 today, how much money would you need? You would need approximately $3.4 million in your bank account today. That's how much money you would need today if you're retiring tomorrow and you do not have any investment. That is a reality, guys. That's a reality check. Now, one thing I would like to say that we have established that nobody can predict real estate. We have also established that we need to invest. You can invest in gold, you can invest in crypto, you can invest in real estate, whatever is more comfortable. I'm more comfortable with real estate because that's what I know better than other sectors. And that's what we are going to discuss. But each one has its own different investment strategy as well. So, but I just divide those strategies in two broad categories. One is intuition based and one is data based. And it's a personal choice which kind of investment strategy somebody wants to use. But generally, who invest based on intuition or gut feeling, they actually have this four characteristics. They invest because other people say so, like, okay, this suburb is growing much faster, let's invest there, we're going to make some money. Or they have a gut feeling, or they have some emotions that I only want to live in this suburb, or I only want to buy house and land, or I only want to live in with certain people, and or I will follow that person because last time I made money, because he made money, he invested there and I invested there as well. So that is one way of investing it. The other way of investing is study years of planning. Who do years of planning? Not people like us generally. The years of planning is done by the government, by Department of Planning, Finance, Housing Commission, etc. The years of planning is done by big private players like Woolworths, where they're going to open their next 10 stores in next 2 or 3 years. Example, data analytics, what kind of information is available on internet? What kind of investment and infrastructure coming in particular suburb? Which pocket within a specific suburb is going to grow more? And what's your target? How much money you want to earn as a residual income from your rent and the expected capital growth in next 5, 10, 15 years. So these are the two different way of investment. I prefer the second one. Somebody prefer the first one, or somebody use mix of them. It's totally up to you. So why invest in real estate? I believe investing in real estate is much, much safer than any other thing. If you know that cryptocurrency, for example, has grown tremendously in 2021, but it crashed immediately and people lost almost $1 trillion in late last year. So it is very unpredictable, right? That's not with the real estate. We study real estate in a long-term pattern at the gap of 5, 10, 15, or 20 years. Here is a research which was published, the links are below here, which was published based on the data of 25 years. That is from year 1993 to year 2018, right? We are not including the last 2 years, guys, because last 2-3 years is a blip, is a small blip where we have seen unprecedented growth. Now, that actually excites many people, and that actually scares few aspiring investors because they don't have enough money. They're doing cat and rat chase. They save some money and suddenly the prices go up. Now they have to save more money for the down payment, right? That's what's happening in reality. But if we remove that this abnormality for last 2 years, and we study the data in a long-term scenario, you will see that the prices of house and land grows by 7.6% per annum, and the capital growth of apartment is around 6.3% per annum. All right, this is based, the data is based from CoreLogic, which is basically what we say is a mother source of all the research in real estate in Australia. And the rental yield is 2.8 and 3.6% respectively. So if you do these figures, the growth pattern of houses and apartment is not very far, not very different. The problem is that many people believe that apartment doesn't grow or only houses grow, because that for the apartment, we have to do some investment with the more analysis, more research. And that's why we are here. We'll do research, we'll do the data presentation today for different, for a suburb, specific suburb today, based on for both apartments and houses, and we'll see what we can achieve. So based on my previous slide, as we say that houses grow by 7.6%. and apartments grow by 6.3%. Now, if we include last 1 or 2 years data, you will see that the growth pattern can be from 7.6 to 9.4%. So I just mentioned that figure here, but for our analysis, we'll just keep 7.6% and 6.3% as we're looking at the long-term vision, right? And if you keep the same amount of money, which you should invest in real estate in a bank, you will earn 1 to 2% interest in Australia. So let's say, let me minimize it. So let's say you invest your $100,000 in bank and you get 2% interest. So your year-on-year growth is around $2,000. But if you invest that money in house and land, you pay a 10% down payment, stamp duty. So and with a 7.6% increase in the capital growth, your year-on-year growth would be $54,000. Now, this $54,000 is not on your original investment, because here you're leveraging your credit borrowing. So this 54,000 is a 7.6% of $720,000. That is the value of your property, right? If you invest the same amount of money in apartment And if we take that average figure of 6.3% per annum growth, your annual year-on-year development capital growth would be around $45,000, which is 6.3% of $720,000. Now, if you look at all these expenses, let's say it is an investment property, you pay interest, you pay council water, strata, insurance, tenant insurance, unforeseen expenses. Generally, unforeseen expenses for houses is a bit higher as compared to apartment because strata takes care of a lot of expenses. So I just took to assume few figures here, and your rental based on 2.8 and 3.6% return is this much. Now, if you look at this, house have more capital growth, that's true. But for houses to maintain your monthly payment, you have to put some money from your own pocket. That's the price you have to pay when you buy a house as an investment. But in apartments, generally most of the expenses are paid, even with only 2.8%, even with 3.6% rental return. Now with the depreciation and everything, at the end of the year, this is your ROI. They're not very far, guys. If you invest same amount of money in house, in long run, you can earn up to 54%. And if you invest in apartments, you can earn up to 51%. They're not very far. In today's market, I would say this figure is quite far. But in either way, you will earn more money than putting your money in your bank. And I just showed in the previous slide that we all need to invest to have a secured retirement. So what variables are controlling this real estate? Why real estate in Australia is booming? I call it 6 eyes. 6 eyes which actually caused this unprecedented boom in last 2 years. But I believe that one of the biggest reason is interest rate, absolutely. But interest rate is the only reason which caused this boom. I would say not, because if that's the case, then
inflation.
Sorry?
Inflation?
What inflation is an outcome of other variables. Inflation is not the direct reason. Inflation is outcome of the more demand. Interest rate is one of the biggest reason for inflation itself, because it increases the supply of money in the market. People are buying more, and as a result, inflation is going up. And also, if you look at the petrol prices because of Ukraine and Russia war, so there's no one reason for inflation. Inflation is an outcome of very many different variables. So again, but inflation can be considered as a secondary variable. But six eyes, I call it 6 eyes. 6 eyes, I believe, are the main reason for boom in Australia. Are interest rate. Second is incentives. The government has given a lot of incentives just to keep real estate industry on float. The number one incentive they give is increase the stamp duty waiver from $650,000 to $800,000 for first home buyers. The number 2 they started giving is a home builder grant. Initially, it was $25,000 home builder grant until December 2020. And then they have reduced it to $15,000. And because of which, the third reason came, that is investors versus owner. If the market has more owners, home occupying people in a particular suburb, the prices of that suburb, the prices of the real estate in that market will go up. I'll explain you why it happens, but just to give you a glimpse of that point, is that if there's more owners occupying in that particular suburb, or let's say in your community, then there'll be less supply as compared to demand. So when there's a less supply, the rentals goes up in that market. If there's a less supply, the prices also goes up in that market. So if there are more owners living in any particular community, they generally don't change their home or sell their home that fast as compared to investors. Then immigration. Now, public sentiments are also very much affected. Public sentiments also affects the real estate market. And right now, as the immigration is opening, investors are coming back to the real estate and putting more and more demand. Why? Because they expect another increase in rentals, and that's create further demand of properties which are not built yet. So that's why a lot of off-the-plan properties are also being sold these days. Then investment versus infrastructure. The more investment local, the state government or the federal government do in particular region, the more demand they create because more people wants to come there, more industries wants to come there. And as more people come to a particular region, the more demand will create increase in price. And lastly, as I just mentioned, the inflation is not is itself a result of other variables like interest rate, prices, change in petrol prices because of international events, change in what happened in Bitcoin. So all this thing happens, all these 6 I's will affect the prices or the demand and supply of real estate in a particular country, state, or city. So if we take the 6 I's and subdivide it in different factors, you will end up having at least 50 to 60 factors. And it's impossible for a layman to study all those 50 to 60 factors and then make an informed decision. So what I did, we actually took 10 major factors which we believe anybody should look at least glance at before making a decision where they should invest their money in. So I divide those 10 into 2 categories, 5 macro factors and 5 micro factors. The macro factors are those factors which affect the whole city or state or a country altogether. And micro factors are those which affect a particular suburb or a small region within a suburb. And that if you consider these 10 factors, your decision of buying a property would be easier. In macro factors, we consider like population growth. For example, which state or city is going to have more population? Example is Brisbane. Brisbane had a huge increase in power prices in mid 2020 and 2021. Sorry, because of expats which moved from Melbourne and Sydney. 60,000 people moved there in a very short span of time. For 60,000 people, Brisbane need another 20,000 homes on average. And it was impossible to create 20,000 homes in that short period of time. So what happened? The prices of existing real estate went really high. Then GDP, employment rate, foreign investment, inflation, financial factors like interest rate, because as just Dush mentioned, that interest rate, and I believe interest rate is one of the major factors which also increase the demand versus supply. And infrastructure, grants, all these things are the macro factors which affect the whole region, whole city altogether. But the micro factors are the one which you also must consider before, because you're not going to buy a property in a whole city or a big region. You're going to buy a property, a one apartment, one townhouse, or one house and land in a small suburb, which is sitting on a very niche region within that suburb. So what things you should look at? You should look at location, how far it is from transport, or how far it is from Sydney CBD or job locations, demography, what kind of people are living there, amenities, is there school, is there shopping complex, again, accessibility to transport like train, metro, buses, and what future investments are going to come there, both public and private. So we are going to discuss top 3 micro factors. We'll see what are the top 3 micro factors we should look at in this presentation. And then we correlate with few of these 3 top factors with the suburb, which we think is the fastest growing suburb and going to see a huge growth in next 5, 10, 15, and 20 years. So as an investor, as a buyer, right, I just shared you top 5 micro factors: location, amenities, demography, transport, and investment. Which would be your number 1 factor? Dush, which would be your number 1 factor?
Demography.
Demography. Okay. That's the first time I heard that in my seminars, but good answer. Deepika, what would be your number 1 answer? Location, demography, amenities, transport, investment? No answer. Deepika, are you there with us? Okay, thank you, Divyanshu. You said location. Deepika, are you there with us? Hello?
Yeah, I'm here, Sumit.
Sorry,
so I would consider. Can you hear me?
Yeah, I can hear you. Yeah.
Yeah, I would consider mainly as an investment, and then comes the location.
So you would consider what government is investing, which suburb with a heavy investment from the government, and then the location.
Yeah.
Okay. Well, all these answers are right, guys. So let me just share generally what we get in survey. So when we do a survey, mostly people say location first, then second again location, and third again location. Always say location is the number one factor which affects their decision. That's the first time in my webinar I heard somebody saying demography, and I think that's a very good answer, Dush, because I also believe that demography, the people, are the number one reason why somebody should invest in any particular suburb. And I'll give you quite a few examples for that. The number one example I would give is Auburn versus Bella Vista, right? Auburn is 17 to 20 kilometers from Sydney CBD, a perfect location, has all things, transport, it has a train station, it has school, it has a public hospital, it has a big shopping complex. Bella Vista does not have all of them. In fact, Bella Vista just got a metro station a couple of years ago. So, but Bella Vista is twice the price of Auburn. Bella Vista is twice as far from CBD as compared to Auburn. Auburn is middle of two CBDs, Parramatta and Sydney CBD. Even then, Auburn is half the price. Why? Because the demography. The demography in Bella Vista is very positive. They're high earners, white-collar jobs, professionals or managers. And that's the reason they have a good schools. The ranking of those schools is high because people who live in these suburbs value education more than the other people. Number two example, I would say Blacktown. Blacktown is very old suburb, has almost the second biggest hospital after Westmead in this region, has the biggest Kmart, has a big shopping complex, second biggest train station after Parramatta in the Western region, and still the Blacktown hasn't seen that capital growth as compared to what we have seen in Ponds, Schofields, Norwest, Rouse Hill, or all these regions in this area, or Lappington, Austral in Southwest. Now, Blacktown has all the investment. Blacktown has number of schools as well. So these are the two examples which tells me that even though we look at the other things like location, investment, and other things, it is not these are the things. These things matter. The number one thing which matters is people who you are going to spend your time with as a home buyer, or who you're going to rent your property to as an investor. And that's a number one factor we believe. The second factor is location. And the third is price versus quality. When you buy a property, when you put your hard-earned money in any investment, where this investment is going to, what kind of quality you're going to get for the money you paid, right? And you can lose hundreds of thousands of dollars if you don't do your research very well. So these are the three factors. We're going to touch these three factors one by one. First, we're going to touch, of course, location, because we have to narrow down the location, why we have to pick particular suburb. And then we will see whether that location has the number one key factor, that is good demography or not. And then the third part. So why invest in NSW? So we need to justify why we're going to invest $500,000 or $1 million of our hard-earned money in NSW. Why not Victoria? Why not Queensland? A lot of people are investing in these areas, right? But why NSW? It is because of this very reason. And Deepika, this is your number one reason, right? You said investment. Look at this graph. If you look at the blue color in this graph, this is the investment which is done alone in NSW. And whole bar represents rest of Australia. If you look at from 2007, in fact, from 2015 onwards, government public projects, major public projects have almost half of the Australia's investment in NSW alone in most of the years. And that's why NSW is always my favorite, because it tells me, this graph tells me that how much NSW and the major cities within NSW are important for both federal and state government. Now, why Sydney? Why not Newcastle? Why not Wollongong? Why Sydney? Why we still want to invest in Sydney and Sydney suburbs? It is because of very reason that government is investing in NSW, because Sydney is expecting, just a second, guys, I think Sydney is expecting around 10 million people by 2056. It means it's going to have 65,000 people coming to Sydney every year. How many people did move to Brisbane? 60,000. That happened once. Sydney experienced this growth every year. Every year, 65,000 people are going to come to Sydney, right? And it means we need around 30 to 36,000 new homes every year. 36,000 new homes need to be built in Sydney every year. Even if you build only apartments at the space of war level, at the pace of urgency, you won't be able to supply these many homes in Sydney every year. Why? The government is expecting to create 817,000 new jobs. They want 70% of residents to commute within 30 minutes from the place of work, so that more people can spend time with their family, not just traveling back and forth between the jobs. And for that, government has heavily invested in infrastructure and transport. Over $87 billion have been invested in 2017, between 2017 and 2021, and they will invest another 51 billion in next 4 years. It means in 8 years, they are going to invest $140 billion. Now, there's no Olympics happening here, guys. Brisbane is having Olympics, and they are planning to invest, because of that, $160 billion in next 10 years. In Sydney, it's a regular thing. They don't need Olympics for that. They are ready to invest that much money anyway. And that's a vicious cycle, guys. Let's keep on happening. More people are going to come to Sydney. There's more lands are going to be developed. More homes are being created. More jobs will be created. More infrastructure is going to go happen. And that's why I have more confidence in Sydney real estate than any other real estate market in Australia, because that vicious cycle tells me that this growth pattern is very difficult to break. What is future demand versus supply? So again, I'll just bring it this thing that we have established that why NSW is my favorite, why government is investing heavily in Sydney, why there'll be more demand than supply because of the number of people keep coming to this city, the number of new immigrants, international students, etc. They need place to live, and that's why we need more and more new homes. But who's telling all this information? So for that, in February, I'm only talking about 2 months ago. 2 months ago, February, Department of Finance, Investment and Housing Commission has released a report, 130 pages report. And just these are the few figures from this report, which will just back my theory. Now they tell us that in Australia, I'm just talking about whole Australia right now. In Australia, there'll be shortage of homes. So there'll be huge shortage of homes coming up in Australia between 2025 and 2030. If we look at this figure, we'll be short of more than 100,000 homes after 2 or 3 years from now, after 3 years from now. So if you don't buy now, and if you think the prices are too high, based on this report, I don't know what's going to happen in future. I don't know if the price is going to go up, go down or not, but I can tell you there'll be shortage of houses based on this report, and we need people will spend more money if they don't find the right place to live, to get the place they want to live in. This is what scares me. And I think if you don't invest now, if you don't have your home or property, if you don't buy property now in Australia, there'll be a shortage. Now I will compare this whole Australia with Sydney. Now, if you do the comparison, this is what we see. We see that Sydney demand is even higher as compared to Australia proportionally. And if you look at the years, Australia will see the first shortage of houses in year 2025, and it will go until year 2030 based on this report. But Sydney will see it a year before. It means 2 years from now, Sydney will see a shortage of start seeing the shortage of houses in supply versus demand, and that will last for 7 years after that. So I don't know whether prices go up or not, but I see this is a major indicator which tells me that I should invest now. I should not wait for that long. Somebody sends, okay. Sorry guys, so we know that we have to invest in Sydney now because these figures are very promising, which increase my confidence as an investor, as a home buyer, why I should buy as soon as possible as compared to wait for next 1 year or 2 years or 3 years. Because if there is a shortage, if the figures which are mentioned in this reports comes to true, then it will be very difficult for me to have my house at the price which is right now. I can see a blip of a small short-term fall, but in long term, it looks like that the prices can go up. So we really don't know, but I'm just reading the signs between the lines here. So we need to invest in Sydney, but where in Sydney? Is it in north, east, west, or south? The topic of this webinar, of this information session was Northwest, but why Northwest? This is because of this report, which we found published by Department of Planning in year 2010. And this report has been updated and now they're having more jobs. The Department of Planning is expecting to create 760,000 new jobs in next 10 years, 10 to 15 years, right? Look at this figure. 50% of these jobs are coming in Western region, West Central, Northwest, and Southwest. Where is the highest number of jobs coming, guys? Out of those 50%, that is Northwest. And that's why we shortlisted Northwest for this webinar. And that's why we want to focus in this region. And this report is old now, but I think in my previous slide, I mentioned based on the data I found on internet, the 760,000 job has been changed to 817,000 jobs. So the government is, outdoing itself, outdoing its planning, what they have planned 10 years ago, they want to do even more. Now, where in Sydney, where in Northwest? Then we ran into this article. This article said that 150,000 new homes are coming in Sydney in 4 years and 200 suburbs will not see it. How many suburbs are there in Sydney? There are 620 suburbs. Out of those 620 suburbs, 200 suburbs will not see a single new house, single new home, right? So, but out of this 150, who will be the winner? Who is getting most of these homes? So we found this heat map, and based on that, it says that Parramatta is going to see maximum number of homes, mostly apartments. Then the Marsden Park, new dwellings, especially house and land, and the Rouse Hill. Then we know, okay, now we have to focus on Marsden Park and Rouse Hill. We did some more digging, and we actually feel that based on our research and our understanding, it can be different. Otherwise, it can be different, but based on our understanding, Rouse Hill is very promising. And Rouse Hill is a suburb which falls under two council. One part of the suburb which falls under Hillshire Council is very well established, very well, it's an old suburb. And it has its own metro station. And the other suburb is Rouse Hill, which is called Rouse Hill Talawang. It falls under the Blacktown Council. It has its own metro station as well, which is called Talawang Metro Station. And we're just going to go through the future projections of population and future growth in these two areas. So I'm just going to go back to the old Rouse Hill first, the established one. There's not much land left. Mostly it is already house and land developed. So the population projection is based on the number of homes can be built there. So if you look at this, the population in this suburb is currently around 10,000. And in next 15 years, they are expecting another 5,000 people to move in. And for that, the government is expecting to create approximately 1,800 new homes. And if you look at that, average household size is falling slightly. It is because the new dwellings would include mostly apartments. They can be 1 bedroom, 2 bedroom, or studio apartments. That means less number of people going to live in one dwelling. Dwelling can be anything. Dwelling, any place where you can live is a dwelling. It can be apartment, it can be a townhouse, or it can be house and land. So they are considering all kinds of dwelling altogether. All the people they are expecting to move in this area. And that's the number we see. So we see that Rouse Hill is a premium suburb, but there's not much of population growth is expecting. But because of its premiumness, because of the demography, the prices are still higher as compared to other suburbs. Now, the government added new area to Rouse Hill, which is a part of Blacktown Council. The moment government added this area, the prices of land in this area are already higher than the prices in Schofields. And they are almost as close to as ponds. And that's what Rouse Hill brings us. It already tell us that good quality people, good demography is going to move in this area. That's why the prices are already high. People expecting good people to move here. And how many people are going to move here? What is the future projection? Now, this is astonishing, guys. Look at this number. In year 2021, the population is 11,000. In every 5 years, population is almost doubling up. In 5 years, it is going to be 25,000. What was the population of old Rouse Hill in 15 years? 15,000. It's going to outgrow the old Rouse Hill in next 5 years anyway, probably more than double. In 10 years, it's going to be 45,000, 64, and then eventually 79,000. 79,000 people are going to live in half of the suburb, That's what tells me that there will be more demand than supply. I can expect more capital growth in future in this particular region. Now, to back my understanding, this is the graphical representation of this table, and it basically considers population versus dwelling. So in this table, we are considering population, that is blue, and dwelling is represented by the gray, small gray. So these are the number of homes, apartments, townhouses, houses in this area, and the blue color represents the number of people living in this area. Right now, we are here. Guys, one thing I want to tell you that I keep on hearing from different people. Whenever I meet about real estate, we miss that window. We miss that time. We should have bought here 10 years ago. We should have bought 5 years ago. We should have bought 3 years ago. But I believe there's always a second chance. There's always, what has gone has gone. But you can still make your own history. You can still be a part of history, of a part of a growth of a particular suburb, if you understand what's going to happen in future. And that's what excites me about this suburb, because there's still much more to come.
Sumit, I got a question, please.
Yeah.
Is there a specific factor which is going to contribute to this population growth in Rouse Hill?
Dush, to be honest, it's okay. Tell me. I don't have the right answer for this, I believe, but I have. I believe one thing. I showed the 6 eyes in the beginning. Remember, those 6 eyes are not controlled by me, not controlled by you. They're controlled by the government, right? It's a government which decides how many people are going to come here. If the government does not give a permission to build houses, nobody's going to come here. If the government does not decide the infrastructure planning to build new transport system like metro, buses, the freeways and highways, the roads, nobody's going to come here. So it's not you or me who decides that, it's a government. And that's government projection, which I'm sharing here, that this much population is going to grow in this suburb in next 20 years. Does this answer your question partially, if not fully?
Yes.
Okay. So again, I don't know all the factors which tell, but I know one thing. It's a government which changes the condition and the demand and supply of particular region, particular suburb, and that's what government is doing. Government wants more people to move here. Governments want more people to live in, and that's why they're allowing a lot of apartments, a lot of townhouses and house and land being developed on the farmlands. Few years ago, most of the land, all the land here was farmland, right? People were living in acreages. Right now, we are seeing apartments being built here, and that's not a decision by us. That's a decision by council, and council is a government here. So, but again, I was just saying that you don't think you have missed your window. We can't get the lost time, but we can be a part of future. So don't worry what happened in past. It is gone, but don't worry, because why? We have still this much growth to see. And what I say, because we are all Indian, I'm just going to say that line, picture to bhi baki hai mere dost. So there's a lot more going to happen in Rouse Hill than what we have seen so far. And I'll just do one small comparison for you guys. I'm going to compare the past growth versus new projected growth of population. I don't know what's going to be interest rate. I don't know what's going to be, the new financial terms and all that, but I'm purely looking at demand versus supply of past and future. So if I move this thing here, I clearly see that Rouse Hill has not seen his best yet. The last growth of Rouse Hill, the previous growth in last 6 years is lower as compared to what we're gonna see in next 6 or 5 years ahead. Now, so I've just started discussing the population. Population is a big part of demography. But again, you don't want to live in a place where there's not positive demography. We always think about the quality of product, prices, location, amenities. Let me give you an example. Let's say there's a 100 apartment building, and that 100 apartment building is exactly at the location in the suburb where you want to buy, right? It is right under your budget. And you come and talk to me and Sumit, I want to buy an 2-bedroom apartment or something, 3-bedroom apartment based on my budget. And this is, do you have any? I show you everything, you loved it, you're ready to make a deposit. You said, okay, I want to make a deposit right now. Can I book it? I said, yes. But then as an agent, I want to tell you what's a demography people living in. I tell you that 50 to 60 people who live in this people who bought the apartment or live in this building are unemployed. They live on Centrelink. They don't have income. Would you still buy the property? Would you still go for your hard-earned money to be invested in this?
No.
That's the reason. That's why demography is the #1 thing. And that's why we need to study what kind of people are living in particular suburb if we want to see a future growth. Or what kind of people are expected to move in that suburb if we want to see a future growth. And that's what I'm going to share in next screen. So if you look at this thing, around 90, the left-hand side is employment graph about working either part-time or full-time. This is a report taken from landchecker.com.au. You can look at different suburbs and their profile. From 5% people working, that takes that is a definitely good suburb for me. It means people are earning money, but how much? Now, if you look at the household median household income, weekly income of Rouse Hill, the median household income for NSW is $1,400. Rouse Hill is $2,400. It's higher than the Sydney median household income. Sydney median household income is around $2,200. This suburb comes in the top 20 richest suburb in Sydney region. Out of 620 suburbs, this Rouse Hill suburb comes under top 20 suburbs. What does it tell me? That people here are good, are either doing white collar jobs, educated, and they have a good lifestyle. Now, income is not everything. If I move here or if I invest here, I need more information. So there's a website called sydneysuburbreviews.com, and they actually do ranking of different suburbs. So they have analyzed around 421 suburbs out of 620 in Sydney, and they have given this suburb a ranking of 21. And this ranking keeps on changing. So I took this ranking in December, as per my memory. So we should not have changed that much. In December 2021, it was 21. And they do ranking on different things, not just on investment, traffic, public transport, affordability, family friendliness. Look at this: family friendliness, pet friendliness, safety, noise, things to do and see. All these things gives me positive vibe. These are the independent sources, guys. I don't control them. This is the information available on the internet. We do suburb profiling, we do suburb research, and that's when we do this. And when we see this kind of figures, this kind of things, this gives us goosebumps, because when we sell any product in those suburbs, we are confident that we are making sure that your hard-earned money will multiply and will grow. Again, future is unpredictable, but yeah. So now, why Rouse Hill? What's happening in Rouse Hill? So we have discussed two things so far, guys. We have discussed location, we have discussed demography, but let's discuss a little bit about investments. What's happening in this region? Rouse Hill is the only suburb so far which has 2 metro stations, Rouse Hill Metro Station and Thalawang Metro Station. If you look at this line, these last two stations in this blue line are in Rouse Hill. All right, Talavang and Rouse Hill. This is going to be further joined to the Western Sydney Airport. Once it is joined, anybody who have property along with this line near metro station, that property prices are expected to go up. And in my opinion, they will go up. I don't know the future, but that's these things are indicators, you know. Then if I go further, Rouse Hill has its own town center. In fact, it is the biggest town center in this region. It has 245 shops already, and they're doing another upgrade, another expansion of Rouse Hill town center, putting another $300 million in that upgrade. Rouse Hill is the only suburb in Northwest region which is going to have its public hospital along the Windsor Road. If I go back to that thing, along the Windsor Road, this is the Windsor Road, guys. This road, along the Windsor Road after Westmead, there's not even a single suburb which has public hospital. Rouse Hill is the only suburb which is going to have public hospital. Today, I live in Schofields. I live here. If I have to go to emergency, either I have to go to Westmead or I have to go to Blacktown. But once the Rouse Hill hospitals opens up, I can go there, and which is only like 5 to 10 minutes drive from my place. Now, why the government is picking Rouse Hill, not Kellyville, Bella Vista, Norwest, or any other suburb during this coal belt, along with this coal belt, for they're picking their first public hospital in this region? That gives me another sign that Rouse Hill is expecting to see another growth. Dush, are you because of this promotion, or are you because you just want to learn about real estate or something else?
I'll take the offer if it's 0%, yes. Okay.
So Dush, what actually is the proposal is very straightforward. It does not have any, hidden clauses. It's only eligible. It is only for 5 units. Initially, there were 9 units. I think 2 are sold. I'm not sure about the remaining 2, but I know as of today, we at least have 5 units, and it is only for eligible buyers. When we say eligible buyers, that it means you should be able to have a deposit bond. So basically what we are selling is, we're selling 5 units with deposit, 10% deposit bond. The deposit bond can be taken by QBE only. And it means the QBE should be able to qualify you to get the deposit bond. We can help you to talk to a broker. If you don't have one, they can arrange paperwork for you. The good thing is that QBE charge around $3,000 to $8,000 for giving you this 10% bond, and we will pay for that. If QBE qualifies you to have 10% deposit bond, we will pay for that deposit bond. So as an investor, you don't have to worry about down payment. If you have equity, you can get that deposit bond. You don't have to worry about the fees which the QB is going to charge. The developer is going to pay as a promotion. And right now we are selling around 5 to 6% below the market value of existing homes in that area. So the discount is there. You don't have to pay any money upfront, and you will be qualified if you're qualified. If as a first home buyer, it's very difficult to get qualified for the deposit bond based on my knowledge. But again, a mortgage broker can tell you better. And but as a second home buyer or as an investor, if you can qualify, it is a great opportunity because you don't have to put any money upfront. Next year, when the settlement is going to be there, you simply have to talk to your bank how much loan you can borrow, 95%, 100%, or 90%, or if you're ready to put more down payments, up to you, and settle the contract. This offer is only available for Verset. This project, the apartments we are selling in Rouse Hill. All right. Now, where these apartments are located? These apartments are, yeah. So this is only for Verset, guys, and Verset is being built by a Marin Group. The construction company is Westbourne, which is tier 1 company, already has won 5 awards for their construction quality. And the interior and architecture is done by DKO, which is another award-winning company, have decades of experience and have done many projects in New Zealand and Australia. So this is the location of the project, which is only less than 500 meters from the new hospital site. As an investor, you want educated, well-earning professionals to be your tenants so they can pay your rent on time. They take care of property and does not cause any trouble. And that's, as an investor, is a key of having a peaceful investment in future. As a homeowner, you want to live next to the good demography, and people who would be working in the hospital would be having an education and good earnings. So again, not much to add there. Location wise, we are only 800 meters away from the Rouse Hill Town Center. This is a Rouse Hill Town Center, guys. We are 12 minutes drive from Northwest Business Park, where it's going to have 12,000 new jobs. So many of those people can move in Rouse Hill because it is quite close. We fall under the Rouse Hill Public School catchment, which is only 1.3 kilometer walking distance and 1.9 kilometer driving distance. We are 2.2 kilometers away from metro station, Talavang metro station. So we are close to 2 metro stations. This location is very close to that metro line, which will go all the way to the new Western Sydney Airport. So this is the size of current Rouse Hill Town Center. This is the metro station. So if this is 800 meters walking distance from the location, add another 100, 200 meters, you are at your metro. So I guess 10 to 12 minutes drive, walk. This is the site, the location of new hospital. So the hospital is literally less than 500 meters from this location. You can go, once this hospital is open in next 2-3 years, you can expect good number of tenants knocking your doors to rent your property, and property prices are expected to go up after that. Because if you look at this, there'll be another $300 million expansion happening right behind the hospital. So in less than half a kilometer radius of this location, more than $500 million worth of public and private investment is coming only from these two things. I'm not even talking about other investments and developments happening in this area. I'm only talking about these two developments: $300 million hospital, $300 million expansion. It is more than $500 million investment in less than 500 meter radius. In terms of team, I told you it's a Mayring Group project. They are developers. They have done development in many different countries. The architect, they only hired Australian companies to complete the job. So the architecture and interior is done by DKO. DKO is very renowned. I have seen their multi-million dollar projects in other regions. In fact, we are selling one of their projects in Macquarie Park. And any developer who hired DKO for their work, they actually flash their name that we are hiring DKO to do interior and architecture. Westbourne is a construction company. If you know about real estate construction, then you must have heard the name of David Chandler. David Chandler is a new commissioner, and he is very critical about the quality of construction. And even he said about Westbourne, a quality builder to underpin a trustworthy development. They have already won that awards in 96, 97, 2015, 2016, and recently 2018. In less than 20 years, they have won 5 awards. This is how your building is going to look like. It's a low rise, only 4 floors, ground floor, first floor, second floor, and third floor. These are very, this is not going to be crowded, but still you're going to have decent number of neighbors. And that's what I would generally prefer, because I don't want to live in crowded places, but I still want to live among the people. This is how your kitchen and interior is going to look like. Wooden flooring, 40 mm bench top, marble splashback, ducted air conditioning, 2.7 ceiling height. How your bathroom is going to look like. Living room. Now let's talk about finances. This was taken in February. I did not check it yesterday for the latest numbers, but this was taken not in February, first week of March. And in the first week of March, the median value of the property, 2-bedroom apartments in this region is 650, and the rent is 470. For 2-bedroom is 480. That is a median, and 660 is a median price of 2-bedroom. Now, why I'm discussing this guys right now here? Because the third point, the third micro variable which I mentioned was most important is quality versus price. What price you're going to pay for the quality, right? And that's why I'm discussing it. And please let me know if you have any questions. Please speak up, because I may not see the chat immediately. So if you have any questions during while presenting next few slides, don't hesitate to ask any question. So what we are selling for, what other people are selling in this area for. So before I share my prices for that project, let me tell you what's happening in this region. You know, this is on the Hillshire Council site, 2-bedroom, 2-bath, 2-car park, which is a 10 to 12 years old building, is being sold for $750 in December. 4 months ago, it was sold for $750. Prices have already gone up since then. This is a 3-bedroom, 2-bath, 2-car park, sold for $910,000 2 months ago. That's all that. This is almost 12 to 14 years old building, guys, not a new building. But now let's not compare apple with oranges. Let's compare apple with apples. So we are in southern Blackthorn Council. This is another apartment which is being sold in Blackthorn Council, a bit closer to Kalawang Metro Station. We are a bit closer to Rouse Hill Metro Station, but quite far from hospital and Rouse Hill Town Center. And even then, it is the 2-bedroom, 2-bath is being sold for $688 in this suburb, right? And this is an old building, guys. This is not a brand new apartment. This apartment is right very next to the building where we are selling, like right across the road. These are the old apartments, not a very good quality. 2-bedroom, 2-bath was sold in January this year for $648. They do not have ducted air conditioning. They do not have wooden flooring. They have very old, very nominal quality, guys, below average quality, according in my perspective. But even then, the 2-bedroom is sold for $648. $685. This is what sold in the similar region, which I showed earlier in Blackthorn Council. But what we are selling for. So just a second. Can you see my screen, guys? Or okay, this is better. So guys, if you look at this, our starting price is $653 after discount. The original price is $683 for 2-bedroom, 2-bath. That is a starting price in our project in Worcester. Right now, there's a $30,000 discount on 2-bedroom, for $35,000 discount on 3-bedroom, and $25,000 discount on 1-bedroom. That's what we're selling. So after applying that $30,000 discount on 2-bedroom, the 683 property becomes 653. That means we are selling below the market value. We have already seen that 2-bedroom, 2-bath of that quality are being sold for 680, 685. So we are giving you 5 to 6% discount. Now you pay 10% deposit. Your property, your equity or your initial investment is $65,000. If you are an investor, not a first home buyer, you have to pay stamp duty. So total investment would be $91,000. I believe that first home buyer is also an investor. And if you're an investor, you should also, because this is your first home, this is not your last home. You should use, as a first home buyer, you should consider this property as a stepping stone for your next property. And that's why I believe that first home buyer is also an investor. So if you are an investor and if you have to pay stamp duty, this is going to be your investment, gross investment. If you're a first home buyer, you can waive out the stamp duty because until $650,000, there's no stamp duty. A few $100 would be there on $3,000 extra. All right. So we are considering few variables, guys, here. So the variables we are considering is capital growth of 5%. I'm trying to be very conservative in this calculation. We have seen that the average capital growth in Sydney in past 25 years is 6.3% for apartments. I said, okay, that's an average. It means some suburbs can underperform that. So, but Rouse Hill, based on the data we have seen, the probability of happening that is very low. But still, let's consider that there will be only 5% capital growth, not 6.3, not 9.3, not 10%, right? Let's say only 5% growth. Inflation 3%, interest rate 3%, rental management 5.5%, right? So pretty conservative, very standard, realistic approach here. Now, today we are getting rent. As of today, the property is going to be ready in future. So rental in future can be higher. As of today, 2-bedroom can be rented for $480 to $500 easily. We consider $500 rental per week. It means every year for 52 weeks, you're going to get $26,000 as a rent. Insurance is $400 for a tenant, that is tenant insurance. Property management expenses is 5.5% as assumed here. Council and water is approximately 2,000. Strata is around 750 to 800, but I still took it 3,400 here, another being conservative, and you are basically still saving money. So what does it tell? A property where you don't have to pay anything from your pocket to manage it, maintain it. If your property is rented for the full year, as a homeowner, if you buy this property and live in, it means you are basically paying less to live in as compared to renting a property, right? So this takes 1 point of ROI. ROI in real estate can be from 3 sources: your cash flow, negative gearing, and capital growth. I'm already take 1 point. That is a positive cash flow. I don't have to pay anything from my pocket if all these assumptions are right. Now, based on the capital growth, if I take only 5%, I'm being very conservative here. My 65,000 investment will become $245,000 in next 5 years based on the 5% annual growth. So it means I'm taking the second point. Now, what about negative gearing? I did not invest 91,000 to get $1,100 a year, right? So that's where the other part comes in. Just a second. That's where the other parts comes in, and that is called negative gearing. These numbers are conservatively assumed. So what happens in the depreciation? The negative gearing is a factor. Is something which government tells you that you as an investor you can use as an investor, government gives you tax benefits, and as a tax benefits, governments allow you to deduct depreciation, even though your property value is growing. You know, it's growing at the rate of 5%, but government allows you to reduce the expenses, take the tax benefit on the building part of it. And that has 2 parts: fixtures and fittings and building. And these are based on the understanding that approximately this much the deduction government would allow. So when you get your property, you have to talk to a professional. They will give you a schedule of 40 years, that in next 40 years, how much deduction you can claim for your investment property. And if you put that in, if you're in the 37% tax slab, every year you're going to get $6,000 after tax from this property. So invest in 91,000, you're getting 66,000 every year. If you put this money in your bank, you maximum you're going to get around $2,000 or $1,800 at the 2% interest rate, on which you have to pay tax on the top of that. Here, this money is after tax. This is a rough calculation, guys. And you're getting a capital growth, and you're getting some money in your hand at the end of the year anyway. Now, if we calculate the ROI with a very conservative approach, if I buy my first home or if I buy an investment property, I can simply get a 198% ROI on my capital growth, and in total, with tax benefit and other things, I can get easily 244% capital growth in 5 years. Now, this is for those people who are investing 10%. What if you're investing less than that? Proportionately, it will go up. And that 0% down payment, $0 down payment gives you that option. Now, the process is very simple. If you like what you have seen, if you want to see the floor plans, let me know. We can schedule an appointment. The builder already has built 4 buildings 3 years ago. So we can show you what they have built 3 years ago, and what they're going to build now in future, and how they are upgrading everything. Select the floor plan. If you like with the floor plan, pay $2,000 deposit, which is a holding deposit. Once you pay $2,000 deposit, we'll take that floor plan off the market, so nobody else can book it. We'll issue the sales advice, issue the contract, review the contract within, and exchange, pay the bond, get the 10% deposit bond, or get the 10% deposit and exchange the contract, and expect the settlement in Q4 2023. If you don't want to exchange the contract after 7 days, you still get your $2,000 back. So there is no risk. We'll give that money within 48 hours to 72 hours, whenever the next batch of refund process goes up. And the process is very simple. So again, if you like what you have seen, guys, let me know. Like to schedule an appointment, give me a call. We also sell in Norwest, Schofields, Marsden Park, and Rouse Hill in this region, including Rouse Hill in this region. So happy to help you to find the right property. All the information related to Suburb and the specific project can be shared on one-on-one meeting. Any question, guys?
No questions from my side, Sumit. Thank you. I'll reach out to you sometime and then we can discuss further.
No problem, Deepika. And also, if you want, I know you are interested somewhere in Norwest. So I can book your appointment on Saturday. If you want to meet on Saturday and discuss the floor plans or see what we are selling in Norwest, what we are selling in Rouse Hill, I can show you all the.
Yeah, we can think of it, but like if you can share me the details of the project in Norwest, so I can look into it before meeting. So I want to know actually how much is the area and approximately, and how much is the cost. Cool. So that one more.
Yep.
One more thing is, in the session, as you mentioned, a land in Rouse Hill.
Mm-hmm.
You had 5 lands in Rouse Hill. If you can share the information on that, I can look into it and then like make a proper planning before we can meet.
No problem. What I'll do, Deepika, I'll send you the land sizes and prices very soon. And just let me know. Let's have a face-to-face conversation, because no matter how much information I can send over the email, I can only explain very few things in the writing a text as compared to a verbal communication.
Sure. Yeah, sure. I just wanted to check, like, you know, the Norwest quarters, you mean to say the apartments are there, right? How much is the area for 2-bedroom apartment?
So we have different sizes. So we have small 2-bedroom small, 2-bedroom medium, and 3-bedroom small, 3-bedroom medium. 3-bedroom large. 2-bedroom small is around 80 square internal. 80 square meter internal, and external is depending on the balcony size. The large 2-bedroom is close to 90 to 95, which is almost like 3-bedroom. They have a big study in them. The starting price of 2-bedroom is around 830 there. Norwest is another suburb which you have very high confidence, because it's going to be a new smart city in this region. The huge amount of investment, $3 billion of investment, is coming up in that area in next few years. 15,000 jobs are being created, 12,000 in the Norwest Business Park, 3,000 in the Norwest market. So I have all the variables. I have the presentation. I'm happy to share with you and your husband on one-on-one meeting. No problem with that.
Yeah, sure. Thank you.
My pleasure. Please let me know if you like to visit the site. You have to have the floor plans, and if you want to discuss any of the suburb where we're selling. No problem with that.
Thank you.
My pleasure.
Okay, thank you. Thanks for the presentation, Sumit.
I hope you like it. Thank you, Deepika.
Yeah, thanks. Bye.
Bye.